What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. By the way, we are almost at 8,000 subscribers. This channel is growing, and happy Dividend Warrior Wednesday. So one thing I want to address is YouTube still having issues with this processing error. So it's taking forever for videos. Once you upload a video on here and edit it and this processing, it's taking forever. Everybody's having issues. It's blowing up on Twitter. They're trying to say that they're doing stuff, but they're not fixing it. So I'm going to have to post videos a day ahead of time and then just post it like this for the time being. It's kind of a pain in the butt. It really is, because you just don't know how long it's going to take. So I have these 3 dividend stocks. There's some that you guys wanted me to do reviews on. One of them, maybe a yield trap. You guys tell me what you think at the end. So make sure you smash that like button, and let's check these stocks out right now. That first stock is Stellus Capital Investment Corp. It's sitting at $13.74. Took a beating during the pandemic, as you can tell. A lot of the BDCs and financial sector stocks and the real estate stocks took a huge hit during the pandemic. And at one point, at its low, it was 581. April 3rd, 2020. Its previous close was 1381. Its day range is 1372 to 1388. Its year range is 1053 to 1474. Volume is 68.06K. The PE ratio is 6.67. Dividend yield 8.15%. So what are these guys about? The Stellus team began investing in the little middle market companies 18 plus years ago, with only a handful of players existed. Since then, many lenders have entered and left the market. Okay, right here, Stellus remains focused on building long-lasting relationships and becoming a long-term partner to the businesses and private equity firms they support. So the Stellus team has spent a majority of its careers in credit, with additional experience of private equity, restructuring, and operations. Our breadth and depth with the lower middle market helps us quickly evaluate new opportunities and be supportive and steady partner throughout the life of a loan, even in the face of volatile company performance or macroeconomic cycles. Efficiency, timeless and reliability. Timeless and reliability are key attributes to any capital partner. Our small and seasoned team avoids bureaucracy and facilitates an efficient underwriting process. As a result, we deliver quick, thoughtful feedback, certainly to close, and constructive engagement throughout life in the investment. It says experience. Your partner group works together 18 plus years. Gosh, this thing's driving me nuts. With most of the managing directors grown up in the business, blah, 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 340 plus years of principal investing experience. Okay, so what is their portfolio about? Here's some of their investments. They have Aurora, Becker's Hospital Review. Actually, Becker's did one on my hospital system before they got bought off, and they drilled my hospital system. So we needed to be bought off, or else we would be out of business. Bolero, Colford Capital, Compass Health, Dr. Scholl's, a little popular, Exacta, EOS Fitness. So they do some investments pretty well. And that's somewhat attractive that they have. So what else are they doing, and how's their revenue is something else that's important. That's a lot of companies, by the way. I mean, top to bottom, that's pretty attractive. So let's check out their revenue. So this is in millions of US dollars: 32.32, 35.159, 39.49, 35.64, 53.26, 58.9, 56. You can blame the pandemic. So revenue-wise, they're actually doing very well. So how are they doing as a dividend stock? Again, these guys are a high-yield dividend stock. So you can tell they're quarterly. Then they changed to monthly, like to 11 cents basically. Then all of a sudden they changed to quarterly. So a lot of dividend stocks, business development companies, they all of a sudden changed to quarterly because of situations with the pandemic, and then they all of a sudden went back to monthly. So 11 cents went to quarterly, then went to monthly. You can see when the pandemic was still around and people are trying to rebound. Kind of a given. So 8, 10 cents, 9 cents. So there's a little bit of a dip here. Then back to 11. So this is a monthly dividend stock. It kind of reminds me of Prospect Capital. I think it's a lot more financially stable. It has a dividend yield of 8.12%, a PE ratio of 6.71. And again, this is not financial advice for entertainment purposes, only disclaimer in the description. But hopefully with their revenue, you're going to see an increase in dividends, monthly dividends, because they look like they're a monthly dividend stock, but I want to see the money. Show me the money. I want to see an increase in dividends before I even consider this stock. Because, I mean, look at this. 2020, I mean, all these years, it didn't even increase a cent when you have better real estate investment trusts, monthly dividend REITs, and better business development companies that have increased a cent. You know, Gain and Main look a lot better and more attractive, and just not very attractive to me because there's no dividend hikes at all. And it never crossed 0.113. So 0.113 is something that's very steadfast, and I want a dividend increase before I consider it. But I'll keep an eye on it for you guys. Let's check out the next dividend stock. That next dividend stock is Redwood Trust, RWT. It has a dividend yield of 7.61%, PE ratio of 5.14, volume 1.09 million. The market cap is 1.38 billion US dollars. The tier range was 926 to 417. That is a big dip. By the way, 926. What was this right here? I mean, it's not doing well against the S&P. Wow, it hit 256. So some of you guys that capitalized on a dip like that, kudos to you if you bought it. Day range is 1203 to 1223. Its previous close was 1206. So at one point it was somewhat doing okay. 17, slowly going up. It was like 15, 16. It's almost like $1 a year in the trends. Took a huge nosedive. You can tell that this is a real estate investment trust just because the rates took a big hit. So let's check these guys out. We invest in mortgages for single family and rental properties and expand liquidity that helps more Americans own and rent homes. We also acquire, sell, and securitize residential loans and provide a steady source liquidity to the owner occupied and rental markets. Okay, so we issue jumbo private label mortgage-backed securities, helping families own and rent homes. We've become one of the nation's largest issuers of securities of this kind. Throughout our programs, originators can lend to a wide range of borrowers by maintaining control over the lending process. So here's a risk. Let's check this out. A lot of the mortgage-backed real estate investment trusts you have to be very careful with. Again, let's see how they're doing with their revenue. So here's a revenue in millions US dollars. I like the trends right here. 241, 259, 246, 248, 378, 622, pandemic, 571. So the revenue has increased significantly from 2014 to 2020. I like the revenue increase. And for mortgage-backed real estate investment trusts, increasing revenue is very attractive to me. Let's check out their dividend history. 2013, 28 cents. 2019, 30 cents. Then they hit 32 in 2020. Then you can see the pandemic, like 12 and a half, 14, 16, 18, 23. So there is a dip there. And they have a 7.82% dividend yield, a PE ratio of 4.94, an annual dividend of 92 cents. So the one thing with these guys, where are the dividend hikes when their revenue has increased? It's not very jumpy. It is a high yield dividend stock. It's one that I'm going to keep an eye on. Dividend hikes are there. They're still struggling against the S&P. They're sitting at 1209 right now. And it is an attractive high yield dividend stock. I mean, the revenue is going up and they're slowly getting back there. I mean, look at this, 28 cents, 30, 32. A little bit of a slow dividend hike, but based on the trends, again, this is not financial advice for entertainment purposes, only disclaimer in the description. This is an underrated dividend stock, and this is one that has dividend hikes. It's cheap, and this is one that's definitely on my radar. I don't like the trends versus Arbor Realty Trust. Arbor Realty Trust, I think, is better, but this is one to keep an eye on. It may be a risk. This one's a risk, but it's not as risky as IVR. That's one thing, because I've said, look at how cheap IVR is versus these guys. There are dividend hikes with this, which is good, and they're trying to rebound. It's going to take years for these guys to rebound, just like IVR. Arbor Realty Trust is really strong. I don't know. It's just amazing, their business model. But these guys are trying to make a comeback. So keep an eye on this one. This is a high yield dividend stock. It's definitely on my radar. Let's check out the next dividend stock. So here's another dividend stock that you guys wanted me to do a review on. And by the way, if you hit that notification bell, I did post a video on these guys probably about 2 or 3 weeks ago. So make sure you hit that notification bell so you don't miss future videos. This is Horizon Bancorp. This is HBNC is a symbol. Has a dividend yield of 2.89%. PE ratio of 10.47. The volume is 152.93K. The market cap is 903.05 million US dollars. The tier range is 1566 to 2380. Day range is 2052 to 2133. Its previous close is 2125. So this stock, okay, is located in Michigan. So this is a bank stock. This bank is located in Michigan. Okay, and it's done very well. It has some very nice dividend hikes, which I'll go over with you guys. And let's check out their revenue. So its symbol is HBNC. So this is in millions US dollars: 102, 117, 141, 161, 200, 251, and then 264. So take it to the bank. That's always they say in the phrase, take it to the bank, because you're getting dividend hikes, you're getting revenue increases, and these guys are making money. Think about it. Credit cards, they make money. Anytime you swipe money in a machine, they have to pay a fee to the company. They have to pay Visa or MasterCard, or it's crazy. Just I'll go over that one of these days. Just understanding how a credit card makes money. I really think it's interesting with these credit card companies and these financial companies and banks, how they generate revenue. And don't forget car loans, housing loans, business loans, all that other stuff that they have, that they offer as a bank. Let's check out their dividend history. So I like the dividend hikes. Look at this: 2019, 10 cents, 12 cents, then they hit 13 in 2021, and then 2022 they hit 15 cents. So you're getting a significant dividend hike. Okay, they're sitting at 2075. They have a PE ratio of 10.67, a dividend yield of 2.82%, an annual dividend of 60 cents. So this is one with bank stocks. My goal is to get at least 100 shares in certain bank stocks and load them up so that I can buy more. So imagine having 100 shares in JPM or JP Morgan and just getting that dividend income from those guys. And that's the same thing with bank stocks. I want to get to 100 shares, especially at KeyBank, Huntington Bank shares. And I'm looking at getting Regions Financials as well, RF. So let me know what you think of this video. And again, YouTube has been very behind with these processing videos, which is becoming a nuisance. I want to post videos a lot earlier than the time that it takes to be produced. You do a 20-minute video, you edit it 10 minutes. It should take less than an hour. But for some reason, YouTube's having a lot of issues as of late. I'm going to try to pump these videos for you. You guys take care and have a good one.